We've got some new people joining us online. So hello, new people online. Welcome to the Texas REIAs, the largest network of real estate investor associations and real estate investors in the great state of Texas. 150,000 members, participants, and attendees going back to 2003. The Texas REIAs provides resources for Texas real estate investors. What kinds of resources? All kinds of resources. We have 257 vendors, over 1,000 private money lenders, 4,000 accredited sophisticated investors, and we do market updates and training. So I'm going to do a very quick market update for you right now. So what's going on in the market? This is a Texas roundup slide. The average price house in Texas right now is $425,000. It's up 1% from 1 year ago. Basically, it's flat. The median price in Texas is $335,000, down 1% from 1 year ago. Basically, it's flat. So the market is flat. But if you want to know one data point, like what would you look at if you just wanted one data point that's kind of telling you the barometer for the market, it would be this data point right here. Months of inventory. Months of inventory. What is months of inventory? How do they come up with this? If you took all the houses for sale on the MLS and you stopped adding any more, you just say, hey, okay, if your house is not on the market, you can't add it to the market. We're going to just take the houses we have for sale and we're going to sell them until we're out, until the shelves are dry. How long would the inventory last? The answer, 5.6 months. That's how many months of inventory we have. Okay, 5.6 months, which is the average amount of time it takes to sell one house. Now that's average. Some take a lot longer, some take a lot shorter. Average 5.6 months. Okay, now let me put that into perspective for you. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. So help me with the math here. What kind of market are we in? We're in a seller's market. People don't realize we're in a seller's market. Yeah, this is actually a seller's market, believe it or not. Not much of a seller's market, but technically it's still a seller's market. Now, a year ago, we had 4.8 months of inventory. That's a pretty good seller's market. Now we have 5.6 as is barely a seller's market, but it's still a seller's market. What happened to the buyer's market? Why didn't we get a buyer's market? Well, let's talk about it. History. 2021, prices went up 18% in 1 year. 2022, prices went up another 10.7% in 1 year. 2023 flat, 2024 flat. Except at the end of 24, it went up a little bit. Why did it go up a little bit? Because interest rates went down a little bit, right? But not much. Okay, so here's the thing about prices. What's affecting prices? Real estate cares about two things, supply and demand. Okay, supply and demand. What's the biggest thing that changed over the last several years? Interest rates, they went up. Okay, when interest rates go up, what happens to home prices? They go down. A lot of people think they go down. Well, here's the thing, right? When interest rates go up, loans are more expensive, houses are less affordable, okay? So fewer people can afford them. So demand goes down. When demand goes down, that pushes prices down. But there's an offset. What's the offset? Normally, 2/3 of houses that you see for sale are resale and 1/3 are new construction. Right now it's inverted. Why is it inverted? How come people aren't selling their house? Because they got a 3% mortgage and they don't want to give it up. They should be selling their house. The economy's not bad. People should be saying, hey, honey, let's get a bigger, nicer house, but they're not. They're saying, I don't want to get 6% mortgage. I want to stay with my 3% mortgage, so let's stay where we are, right? So yeah, the demand has gone down, but the supply has gone down. And when the demand goes down, when the supply goes down, what happens to prices? Flat. That's why we didn't get a buyer's market. But there's something else unique to Texas. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where did they go? I think it's pretty obvious where they went. And there's another 12 million people, we don't know where they went, but there's a bunch of them here too. And they all need a place to live, right? Which means they got a house or an apartment. The apartment buildings are full, the houses aren't enough. In fact, I don't know if you know this, but we are in the middle of a housing shortage. Who's heard of this? Housing shortage. There are 6 million fewer houses than we need for the people that need a place to live. And when there's not enough supply, what does that do to prices? Pushes them up. So yeah, interest rates pushing down, right? But migration and shortage pushing up, and you add all that in the blender and it comes out flat. So we're in a flat market. What's going to happen next? Nobody knows for sure, but we have a pretty good bet. And the reason we have a pretty good bet is because real estate is actually not that hard to forecast. Okay, the economy is hard to forecast. The stock market is impossible to forecast. But real estate is really two things, supply and demand. And here's the thing when it comes to supply and demand. We know how many houses we have. We know how many people are having babies. We know how many houses we're building. We know how many people are moving here. We know how many houses we're going to have. We know how many houses we're going to need. We know just about everything. We don't know exactly what's going to happen to interest rates and a couple of other things, but we know just about everything. And that's why it's not that hard to forecast the real estate market. We've been forecasting the market for 20 years. We've always been pretty much right on track, not because we're smart, just because it's not that hard. I'll give you our forecast. If you were expecting some big, exciting market bottom, that was probably it. There wasn't much to it, right? We do expect interest rates to continue to drop a little bit. When interest rates continue to, that's what the Fed is saying, that's what the experts are saying. And when interest rates drop a little bit, it'll juice the demand a little bit, but not much. So there's just not a lot pushing down. There's not a lot pushing up. And because of that, we expect that the prices are going to be remaining flat. So we've got a 6-month forecast that says the market's not really going anywhere, maybe up a tiny bit, but really not much.